Okay, so welcome to this video regarding going through this question in relation to Andy Fleming. This question is taken from the 2018 paper, Unit 1 paper from the A-Career website. And with this question you have 5 adjustments that you need to deal with, and the question is asking you to produce an income statement for the year ending 31st of December 2017. So let's crack on with the first adjustment. You have all these balances given to you at the end of the year. So the first one is inventory at the end of the year is 13,480. Now this is the balance at the end of the year. So this must relate to the closing balance. So the closing stock or inventory. Now the closing stock or the closing inventory goes in both your accounts. It goes into, for both your financial statements. It goes in the income statement as part of your cost of sale, and it also goes in your statement of financial position as part of your current assets. So quite a unique item, closing inventory. It's actually one of those items that the same figure would go into both accounts, and that's quite unusual what happened, and that's why I provided as an additional information, so you don't have to do anything with that as such. Okay, so we can pretty much mark that one off as done. Number 2 is the bank loan of 6% per annum meaning per year. However, the last 2 months have not been paid. Okay, so although the 6% is per annum, there's 2 months worth that have not been paid, which you would have to deal with as a accrual, because anything that's not paid, it will be considered to be an accrual. So here is a reference to an accrual, something that's not been paid. The second part of the sentence is more related to the statement of financial position. So it's not an actual requirement on the question I'm doing, but it does say during the year ending 31st of December 2018. So at the end of next year, you have to pay back 25% of the loan. So therefore 25% of the loan becomes a current liability, and the remaining 75% remains as a non-current liability. So that's an adjustment you have to make in the statement of financial position. Number 3, number 2, in regards to how you deal with this. So I'm just going to do the kind of working out here. So for number 2, and hopefully you can see that quite clear. So the loan is 6%. You multiply that by the actual full loan itself, which is 18,400, which will give you 1,104. That 1,104 represents 12 months. Now that's fine, but we need to work out 2 months, because 2 months, it says here, is overdue, meaning it's not yet paid, it's still outstanding, so it's an accrual. So to work out 2 months of this value, you divide it by 12, times it by 2 months, and that will give you the value of £184. Now what do you do with this £184? Well, you do 2 things with it. First of all, which is not part of this question, you would put it in the statement of financial position as an accrual, which would go as a current liability because it's an expense. So if it was an accrued revenue, it would go as a current asset. And also you have already paid, if you look here, £645 of interest. You've already paid this throughout the year. Okay. So, but you should have paid an extra £184, because that's also part of the financial year. So the total amount that you should have paid would have been £645 that you did pay, plus the 184 that you should have paid, which means in total the amount comes to 829. This is the figure that goes into your income statement. Okay. So that's all you have to do in relation to adjustment number 2. Okay, so I'll just make a note here. This is part of your income statement as an expense, which you just added to your original balance. So let's have a look now at, so I've done number 1, done number 2. Number 3 is rent of premises is paid quarterly. So the rent of £840 for the quarter ended 28th of February. So quarterly means that you pay the rent every 3 months, because you pay it 4 times a year. So if I go back from February, I have paid for February, I have paid for January, and I have paid for December. That covers 3 months. And I'm just gonna on this sheet of paper here, just on a blank sheet of paper, the way I normally teach this is through a timeline. So there are many ways you can teach accruals and prepayments, but the way I prefer to do it is through this timeline here. This timeline is the financial year. So you have the start here of the financial year and the end of the financial year here. So at the start, if you have an accrual at the start of the year, it must relate to something that you have used last year. So you take it out of this financial year. If you have a prepayment, you pay for something in advance, it must relate to this financial year. Same here, if you have an accrual at the end of the year, it must relate to this financial year, because you must have incurred the expense throughout the financial year, but you still have not paid it. And then you have a prepayment at the end of the year, must be for something that you're going to use next year. So when you come to look at this, anything that shows the arrows going out of the financial year have to be taken out of the accounts. Okay, so here effectively this would be a minus from the account, this would also be a minus from the account, and this would be added to the account because it's part of the financial year, and this would be added to the account. Now again, if you want to take a quick picture of that, you can do. Bear in mind regarding this particular scenario that we have, so rent for the quarter ending 28th of February 2018, which is 2 months beyond our financial year. Okay, so January, February is not included in our financial year. We do not want to include that amount of rent, them 2 months worth of rent within our financial year. So how do you work out what is 2 months of £840? So that's relatively straightforward. So for number 3, you do 840 divided by 3 months, because this covers 3 months payment, times by 2 months, which is an overpayment, i.e. a prepayment. So the amount that you've overpaid is £560. Okay, that covers January and February rent. So relating to this this diagram here, the kind of scenario we're looking at here is a prepayment towards the end of the year. Okay, because you made a payment here which covers December, and it covered January, and it covered February. So these 2 months here are no good to us because they're not part of the financial year, so we have to take them out of the account. So we minus this 560 from our rent. So the rent figure is, I believe, is already given to you here, 3620. So therefore this would be 3620 minus 560, which relates to next year, gives you 3060. So that's the correct figure for your rent, which is going to go in your income statement again as an expense. This 500, we can't forget about this £560 because this is also a prepayment. This prepayment goes in the statement of financial position because you've overpaid for something. It actually goes as a prepayment or other receivables as a current asset because we are again talking about an expense. Okay, so that's how you deal with adjustment number 3. Adjustment number 4 is on the 31st of December 2017, Andy Fleming Bank informed them that the cheque of £790 received had become dishonoured. No entry has been made about. So this does not affect your income statement because £790 it needs to be reduced from your bank balance, i.e. your cash book, and the £790 needs to be added back to your trade receivables to increase the value of your trade receivables. So you don't have to make any adjustments to the income statement for that particular adjustment. Okay. So the adjustment in the statement of financial position would be your bank, if you like, is going to go down. Your trade receivable is going to go back up, okay, because that payment has not gone through. And both of these go in the statement of financial position, so no adjustment is needed in the income statement. So the final adjustment is number 5, is depreciation. This one is thankfully relatively straightforward. You've been given the lifespan of the motor vehicle of 4 years. You got a residual value of 2,600. You got the motor vehicle at cost here of 35,600. Okay. So I'm just going to do this on the opposite side here. I'll just actually do it on the working page here. Is number 3 is you have the motor vehicle of at cost 35,600. Take away the residual value of 2,600 divided by 4 years, which will give you the depreciation for the year of 8,250. Now depreciation is quite unique. It goes into both items. It goes in the income statement and the statement of financial position. So in the income statement, this would go as a normal expense. In the statement of financial position, you would have 8,250 plus the provision that you already have in the account. So the provision that you already have in the account is £16,500. So plus £16,500, and therefore the amount that would go in the statement of financial position would be 8250 plus 16,500 is 24,750. Okay. And where would that go in the statement of financial position? It's actually on the top line of your statement of financial position in the second column, which is your accumulated depreciation, which is part of your non-current assets. Okay, so hopefully you can see from the adjustments, that's adjustment number 5, you can see how that is all worked out. Now once you've done your adjustments, and that's kind of where I'm going to stop the video, the rest of it would be just to make sure that you construct the income statement the way it should be constructed. Okay, so you can pause the video now. I will do it and I'll show you my final answer. So you can pause the video, have a go yourself, trying to remember the format of it, and see how you get on. And if you are struggling with the format, I mean, just trying to remember the main headings. So we always start with revenue, and then we always have like cost of sale as the next main heading. So just leave a bit of gap, enough of a gap. And then we have a gross profit, yeah, so after gross profit we will have additional income, and then after additional income we will have minus any expenses, and then we end up with a net profit or loss. So if you just remember these 1, 2, 3, 4, 5 main headings, and hopefully the rest of it will kind of slot in between. Okay, so I'll have a quick go at doing this while it's recording. So your revenue is 149,600 taken from here. You also have return inwards, so this is stock that has come back from your customers, so you have to take that away from your revenue. So you have minus any return inwards, which is 1074. So your actual net revenue comes to be 148,526. Now your cost of sale calculation you should try to memorize. So you would need information about your opening stock, which is here. You got your closing stock, which I've already mentioned is here. You need information about your purchases. Where's purchases? Here. You also need information about if you got any carriage inwards. Yeah. You also need to have a look at your return outwards, which is 650 here. Okay, so these are the information you need. And if you can't remember the cost of sale, just try to remember this. It's your opening stock plus purchases plus carriage inwards minus purchase returns. I'll use the correct terminology. Return outwards. So this is stock going back to your suppliers, and then minus your closing stock. So key things here, knowing what to add. You add purchases, you add carriage inwards to your opening stock, you minus return outwards, you minus your closing stock. So just try to remember the format, and I don't think you will get anything else, any other adjustments to that. So let's put the figures in, it shouldn't be too difficult. So opening stock is 11,730, purchases is 62,450, carriage inwards 1056, return outwards is 650. I put that in brackets because we're going to minus it, and then we got closing stock of 13,480. So if we do this calculation here and put the final answer here for our, this is the final answer for our cost of sale, which is going to be 61,106. Perhaps you should leave a line here, but I'm just running out of space. So we do your revenue, take away your cost of sale to get your gross profit. which would be 148,526 minus 61,106, which will give you a gross profit of 87,420. Additional income. Now, additional income is normally anything that's received in addition to your sales. So in this question, I think we have one item in particular. If we look here, we have commission received. The keyword here is received. So stuff like discount received, interest received, commission received, rent received will all be part of additional income. So I'll just put here commission received, and that will be for £845. So you add that on to your gross profit to get a kind of an adjusted gross profit of 88. 88,265. I'll just put that in the right place. 845. Okay. Now your expenses, you've got a list of quite a few expenses. First of all, you've got the interest, which we kind of calculated. If you remember, we calculated the amount that's going to go in the income statement is going to be 829. So we'll just put that here, 829. We have carriage outwards. Carriage outwards is an expense. It's needed to make a sale. So just take that straight from the question. 637. We have general expenses. No adjustments needed to that. 12,470. We have rent, and again we adjusted the rent figure accordingly, if you remember, to this figure here. So that will be 3,060. And then we also have depreciation, which we calculated it to be for the year 8,250. So add up all your expenses and it should add up to 25,246, and therefore your net profit in this case is your adjusted gross profit take away your expenses to get a final profit figure of 63,019. Okay, so it will not be a profit, it will be not be a loss, it will be a profit. So hopefully you find that useful in terms of how to do the Andy Fleming question. So I'll just scroll up so you can see the whole thing. So it's starting from your revenue all the way to net profit, and just it's quite hard to remember everything within the income statement straight away, but trying to remember the main heading: revenue, cost of sale, gross profit, expenses, and then net profit. So if you remember them 5 main headings, then hopefully everything else will be stuck in between. Okay, so hopefully you found that useful. Please give me some feedback in regards to any other questions that you want me to go through. Okay, thank you.